Mexico, Poland, and South Africa. Great places for shopping for debt. That's according to Bank of America Merrill Lynch research and Daniel Tenengauzer. He's head of Global Emerging Markets Fixed Income Strategy at that firm. He's with me here now.
Good morning.
Good morning. Daniel, you're making a big bet on a big decision out of China this weekend. You expect them to allow the yuan to appreciate?
We first of all, we think this is going to happen in off-market hours. And it could happen as of this weekend, but we're looking for something to happen over the next few weeks and focusing, again, over weekends because that's when markets are quiet.
Why? Why is it just about when the market's closed, or is it really about the political sort of timing here in the business?
First of all, there is a history, right? In general, some policymakers would rather make dramatic or important decisions over off-market hours. That's point number one. Point number two, it looks like in between Geithner going over to Beijing and the premier coming over to the U.S. Next week, it's a good timing to make a move.
What are the odds of that this weekend?
That's a tough one, but we think it's somewhere around 30 to 40% chance of something happening, which is reasonably high, yeah.
Mm-hmm. Now, letting the yuan appreciate is not necessarily going to be all that helpful. It may be in some ways, but Commerce Secretary Gary Locke said it's not necessarily going to fix things for U.S. exporters, and it may make things a little bit more expensive for U.S. consumers.
Well, first of all, people need to understand that there is a global rebalancing actually happening as we speak, okay? The U.S. trade balance did improve over the past 4 years. Since 2006, when the deficit peaked, it has been dropping. Point number two is that for March, China will most likely print the first trade deficit in many, many years. So something is happening as a result of China appreciation that took place since 2005.
So this would be
and
this
is just another step, exactly.
You believe?
Yes.
Okay. Well, we talked about the great places that you're finding to go shopping here, Mexico, South Africa among them. What do you like about those particular emerging markets?
Well, the key point that investors are looking at is are bond markets where you can actually deliver the bonds and bond markets where you can actually buy the currency. For the BRICS, namely mainly Brazil, India, and China, it's extremely difficult for foreigners to actually hold the bonds in their bank accounts here in the US or Europe. In those markets, it's a lot easier to access.
So how do you select, though, the markets where you are interested? I mean, there's so much talk right now. PIMCO, other firms have said that it's interesting to see the developing markets almost be more fiscally responsible than the developed markets.
That's correct. So point number one is debt to GDP ratios in all these markets look a lot more attractive than in any of the developed world. That's point number one. Point number two is that the currencies, in our view, are cheap. So we believe that Mexico is a cheap currency, the peso. The zloty is a cheap currency. The ruble is cheap against our fair value models.
And cheap's a reason enough for you to be buying.
Exactly,
right
yes. Those countries basically don't have large trade imbalances. They don't have large external liabilities. We believe that the ratios are very supportive, and that should be the key thing for those debt markets.
I'm looking at your most recent note here. Many ways to hold chopsticks, you say. Many ways to float the yuan.
That's correct. We basically have...
What way are they going to pick?
Yeah, we have four scenarios. The main scenario is one where we see a gradual appreciation, which is very much priced in the market. We see 670 by June, and we see 650 by year end. We see three risk scenarios. And the first one is that nothing happens with a 20% chance. We see a 15% chance of a step revaluation, a la 2005. And then we see a fairly small chance, but still possible, of just outright volatility. And we wouldn't rule out even a weaker China as a first move and then appreciation.
All right. Well, we'll watch, and we'll watch for what you say is a 30% chance this might happen this weekend.
Yes,
as soon as this weekend.
Correct.
We'll hold you to that. Thank you so much, Daniel Tenengauzer, for joining us here on In Business.